Now, there's no shortage of headlines these days about how much Wall Street loves rate cuts, but markets have been tripping over themselves in search of new records.
This is as sobering news about unemployment piles up. That more or less guarantees a rate cut by the Federal Reserve this week. Now, President Trump's increased focus on the central bank may be influencing that calculation. Now, take a look at our next report for more details on this.
The U.S. Fed is widely expected to cut rates this week for the first time under Trump 2.0. Despite extreme pressure from the U.S. administration to cut rates, the Fed has broadly ignored those calls. The central bank has been on the sidelines since December last year, but the latest U.S. employment figures have gone from bad to worse. Still, this week's Fed action will be viewed from a different lens, even as the central bank has good reason to cut rates. Trump's criticism of the central bank has included several months of public comments directed at Fed Chair Jerome Powell. The president's firing of Fed Governor Lisa Cook took government intervention to a level not seen before. While an appeals court has blocked Trump's firing of Cook, questions have surged about the central bank's independence. David Kelly, chief global strategist at JP Morgan Asset Management, warns that the expected rate cut this week will actually increase risks for markets. Kelly suggested that might be the case if the Fed action is perceived to be driven by political pressure. The central bank's forecast for the economy will be closely watched to understand the reason for the change in stance now. Wall Street bond and stock investors have been cheering the Fed's expected resumption of the rate cut cycle after a 9-month pause. Bets that Fed easing will keep powering corporate America put the S&P 500 above 6,600 for the first time. The tech-heavy Nasdaq 100 saw its longest advance since 2023 after Google joined the $3 trillion market valuation club. Also aiding sentiment was a framework deal on keeping TikTok running in the U.S., with Trump saying he would talk to China's Xi Jinping Friday. Wall Street has notched fresh highs repeatedly on Fed rate cut bets. However, a $14 trillion record-breaking run in American stocks is heading for an inflection point this week. Analysts say markets could take a cautious stance and look to diversify after the recent rally. Kelly said the Fed's decision this week is seen as a capitulation to political pressure. A new layer of risk is being added to U.S. financial markets and the dollar. Trump added to investor doubts on Fed action on Monday. The president urged the Fed for a big rate cut. So traders will really hang on to the tone of Powell's press conference and the dot plot projections. Will that show weak jobs and a slowing economy as the main reason? Investors will also watch for the Fed's take on inflation from Trump's tariffs. For markets, those projections will reflect in Fed's decision would be driven by economic reality or political pressure. The differing calculus would weigh on markets if there are any questions on the Fed's independence. Business Bureau, WION World is One.